Good morning, everyone. Today is Friday, April 23rd, about 7 a.m. here on the West Coast. And today I'm very excited about this video. It's a long time coming. I don't know why the screen recorder that I'm using is not showing the webcam video, but it's all good as long as you can see my screen. The market's looking a little shaky, but as long as we maintain a long-term view on these assets and understand what we're getting into, that's what I'm here to do, to help guide and provide some education on this topic. Yesterday, Biden proposed changes to the capital gains tax code, possibly acting as a catalyst for these markets, but nothing to worry about if we truly understand these assets and maintain a long-term view. So first off, I want to start off explaining what Bitcoin is, why it was invented, and how it all came about. So I think of crypto and Bitcoin in general as just a progression of tech. Think of everything in the history of the world as tech, improving society, improving our lives, whether it's the invention of fire, invention of electricity, the automobile, the airplane, um, first digital money with credit cards, the internet, now electric vehicles. Everything is a progression of tech, right? So that's what I understood crypto and Bitcoin as the progression of tech in regards to money. So first and foremost, you could think of Bitcoin as a different savings vehicle compared to saving your money in the US dollar, which has been losing purchasing power since its inception. In the 30s, um, FDR banned the purchase of gold. So this is what they're worrying about might happen with Bitcoin. But then, if you look at the charts in the 70s, gold still ran crazy. And Bretton Woods, which is like all the financial players in the whole world, met together and they deemed the USD as a world's reserve currency. And in the 70s, previously, before this, the US dollar was backed by gold. So it was backed by a hard asset. But in the 70s, the US took the dollar off the gold standard, and it was just purely based on, or the value was based on US dollar being the world's global reserve currency, as well as um, being backed by the strength of the US military. And whenever we go to war, that is to fund the printing that has happened, and it's just a never-ending cycle. Where more is printed, we get into more debt, and you have to print more to pay off that debt or tax the citizens as well. So that is a thought process of why Bitcoin can be thought of as a savings vehicle. And why was Bitcoin created in the first place? So the concept of Bitcoin came together in 2008. I'll remember 2008, the last financial crisis, the huge black swan event before the pandemic happened. So in 2008, right, a lot of banks defaulted on their loans. There was a housing crisis where they were lending more than they could bite off, and people were purchasing homes at astronomical prices and borrowing crazy amounts. And um, this helped spur a catalyst to crash the markets. And then what did the government do? They bailed out Fannie Mae, Freddie Mac, these lenders, and then they bailed out these corporations. This is all happening again in 2020 and 2021 with what we're going through right now. So that's why Bitcoin first came about. It was a response to the great financial crisis and the world's reliance on banks as an intermediary of all financial transactions. And the purpose of Bitcoin was so that banks did not need to be involved. So Bitcoin is a decentralized currency, cryptocurrency based on cryptography. It's peer-to-peer currency, can be transacted with anyone in the world, no intermediary needed, like a bank, and that's what provides its value. Of course, it's a limited supply. It's on a public ledger, also known as a blockchain, so every transaction can be tracked and monitored, and it is maintained by computers throughout the world, running nodes and verifying each transaction as legitimate. And that's just a brief overview of how I understand it. And there's people better than me that can explain it better, which we'll get into later. I first wanted to start off with Nipsey. So Nipsey, RIP, passed a year or two ago, and he's probably one of the reasons why I got into crypto in the first place, in addition to podcasts and people that put me on in the first place. But he was always a forward thinker and really understood the value and the usefulness of crypto. So let's start with this.
Just cryptocurrency is, I think it's like a form of karma. I think that the banks had such a crooked model that the engineers and software designers and programmers was like, we're not gonna fix this with a protest. We're not gonna fix this with a march on Wall Street. We're gonna fix this with technology. And they created a equalizer that just, it checkmated the whole game. You know, that's my view on it. It's just like the energy balancing out what went wrong over there, and just the disadvantage that the people were at. The cryptocurrency is balancing that out, or will in the long run. It's gonna take a while, but it's gonna create an option, and you're not gonna have to go operate in that system that led to like 2008, all the banks collapsing and the real estate bubble and all the malpractice of power that, you know, was happening in the banking industry and the central banks and all that. So it's like, damn, that was slick. Whoever came up with that was slick. If you really peep it from a political point of view, for sure. You know what I mean? That was real effortless checkmate. You know what I mean? They exited before anybody knew what was up.
And they still got bailed out.
You know what I'm saying? It's a lot of reasons that, you know, political reasons why it's a big thing, and it's financial reasons why it's a big thing, you know, and even like on a simple level of like sending money overseas or something, to be able to do that peer to peer and not have no middleman with a fee, and with a policy, it's just a direct transaction that's, you know, regulated by a public ledger. That's a big innovation if you understand like banking and PayPal and all that type of shit. You know, somebody told me that it's like what the internet was in like the early 90s. And think about what that turned into and all the billion-dollar businesses that was built off of that. That's like what the cryptocurrency blockchain opportunity is similar to. So it'll take a while before we see it mature and really turn into what it can potentially be.
Right.
Yeah, so Nipsey highlighted a lot of great points. You could tell he really understood crypto and the thesis and the usefulness of it. And a lot of people do compare it to the early stages of the internet in the 90s. Whether right now, if we compare crypto to the early stages of the internet, possibly we're in around the 2000 bubble, maybe, or still in the mid to early 90s as well. So if you're watching this, we're still very early in the early stages of crypto. So I want to emphasize that. And next, I want to highlight um, a well-known investor, hedge fund manager, speaking about cryptocurrency. His name is Bill Miller.
Now, let's take a look what legendary investor Bill Miller has to say about Bitcoin.
I came to Bitcoin via Wences. I met Wences, I think it was 2013, maybe latest 2014. I think it was 2013 out at Sun Valley at the annual conference that Allen Company has, which brings together people from tech people, Silicon Valley entrepreneurs, government officials, and people from sports and Hollywood. And Wences gave a talk that's similar to what he said today, a longer talk explaining Bitcoin. And I was interested enough in it, and he and I hadn't had lunch, and we chatted about this, and I was interested enough in it to sponsor a conference at the Santa Fe Institute, where I was chairman at the time. And as you may or may not know, the Santa Fe Institute is is a scientific research organization that is involved in complex systems theory. And so we did a conference that had a similar name to our panel. It was called Money, Past, Present, and Future. And I invited Wences to give a talk at that. And it brought together, SFI, by the way, was founded by a variety of scientists, including 3 Nobel Prize winners, Ken Arrow in economics and Murray Gell-Mann in physics and Phil Anderson in physics. But we brought together a group of economists, cryptographers, mathematicians, historians, sociologists, archaeologists, physicists, and then, business people, investors, entrepreneurs, to just look at the history of money and how it evolved, what had happened, and how different disciplines thought of it. And then, and so it was a very synoptic view of things. And it became clear to me at the time that I think we had the same reaction at this group, which is roughly a year after the Sun Valley conference, that I saw at Sun Valley, and I would venture to say it's the same today. So there were probably 350 people at Sun Valley when Wences gave his talk. And I would guess that of that 350 people, if you surveyed them, and these are, very, very prominent, Bill Gates is always there, Warren Buffett. If you survey these people today, call it 6-7 years after that talk and observing what's happened with Bitcoin, I bet you wouldn't find 5% of them that own Bitcoin. And the same thing with the folks at Santa Fe, very, very smart people. I would guess maybe it's 10% of that. So it's extraordinarily early in the adoption cycle with Bitcoin. And when Mike mentioned that he talked to Stan Druckenmiller saying it was a solution in search of a problem, I would, and I have great respect for Stan, obviously, but I think it's fairly clear what the deal is with Bitcoin. I mean, the question is what role does it play? I mean, what is it? What problem does it solve? And going all the way back to the history of money. In fact, the first financial crisis was in Rome with Tacitus in the first century AD, and that they've been recurring events in economic history all the way up until last year in 2008 and 2009. And the problem it solves is how do you safeguard a portion of your assets from the vagaries of the financial system, and especially a system which is monopolized by governments. And those monopolies have a way of behaving in ways that are in their own personal interest and not necessarily, as Wences demonstrated, in the interest of the citizens. And so I think that's the problem that Bitcoin solves. It's completely, it's a decentralized, peer-to-peer, permissionless, unhackable, permanent record of various transactions. And it's the only economic unit that I'm aware of that is both infinitely divisible and instantly transportable, where the supply is completely independent of the demand. So no matter what the demand is for Bitcoin, the supply is 21 million. And there's, it's estimated there are 47 million millionaires in the world. And so if each millionaire wanted one Bitcoin, he or she couldn't have it. They'd have to settle for something less. And I think Coinbase has something like what I recall, like 58 million users or something like that. And so there's billions of smartphones out there, all of which, can send and transmit Bitcoin. So Friedrich Hayek wrote a monograph called The Denationalization of Money, where he argued that that money being monopolized has a similar problems with whether it be violence being monopolized by governments or education being monopolized, or that there are things that the private sector can do that the governments can't do or won't do. And he argued for basically denationalizing money and having all kinds of money. And I think somebody earlier mentioned that we did have a period before the Civil War where that was the case. But now let me just get to what Pete was talking about a little bit about network effects. So Bitcoin basically is a global computer network. That's what it is, and the computer network is set up to validate transactions and to keep a record of those transactions, and it's paid by generating about 900 Bitcoin a day. And what I found so interesting about this network is that it's following the same adoption cycle that all of the great technological innovations have had. And when I bought the Bitcoin, which I followed Wences's view, and I put 1% of my liquid net worth in it, and I think my average cost was around $300. So, but I was referred to for a long time as a Bitcoin bull, and I'd correct that and say I'm not a Bitcoin bull, I'm a Bitcoin observer. I'm just observing what it's doing, and what I can afford to lose. Anybody can afford to lose 1 or even 2% of their net worth. But there's asymmetric risk reward here, and so I was an observer up until probably a year and a half ago, and then it's finally like, no, this is actually going to work. It survived a lot of travails, and it's continuing to survive and thrive. And so if you go back and just go all the way back, look at the printing press, and then look at the steam engine, and then look at railroads, electricity, autos, computers, the internet. All of them follow a similar path. It's a path that if you can read a book called The Diffusion of Innovation by Ev Rogers, a classic, or maybe more up to date, the Stanford economist, former Stanford economist Brian Arthur has 2 books. One of them called Increasing Returns and Path Dependence in the Economy, and the other called The Nature of Technology. And what Brian talks about in that book, and I'll wrap up here to not to monopolize things, but what Brian talks about in those books is that because technology is required to be interoperable, and when it also consists of networks, and the networks become more valuable the more people are on the network, then they follow a certain path. And what happens is that initially there's a burst of innovation. We saw that with Bitcoin being the first, but then Ethereum came along, and then you had other ones, and then you had the forks, and then you had this explosion of ICOs. And those, I think we have 8,500 or something now tokens and ICOs floating out there, most of which I think are worthless or will be worthless. But again, that's a very traditional thing in evolutionary theory, where you had the Cambrian explosion, where after a great extinction event, all kinds of new life forms sprung up, but then it coalesced down to a smaller number. And in technology, what happens is once you reach what Brian regards as lock-in, so once you reach a dominance of a particular technology that's 50% or greater, then it's very, very difficult. Other technologies can survive, but they can't thrive, and they will never be anything like what those dominant technologies are. And we see that right today. So once we had dominance with Google in search, Google dominates search, Facebook in social, Amazon in retail. So with those kinds of things, you're getting the same thing in Bitcoin. I think Wences had what I thought was one of the more remarkable comments, was Bitcoin dominance right now has come down again in this flurry of activity. But Bitcoin dominance, and correct me if I'm wrong here, in electricity usage is something like, or energy usage is something like 98%. So it's a very, very large number, and it basically indicates kind of game over in that space.
Just those of you who do not know, Miller's Value Partners has $3.8 billion in asset under management. Bill Miller believes Bitcoin's network.
All right, so there's Bill Miller, and if you Google him, what his net worth is, 500 million. He is an investor and chairman of this trust, capital management. But yeah, he's a well-known investor in the space. What I like to highlight that he talked about as well was a network effect. So with Bitcoin being around since 2009, 2010, and the network effect it has created, and since being around for so long, and the increased adoption with it, it's basically at this point nothing really. Of course, there can be something that may possibly be created and overtake it, but the effect that Bitcoin is trying to have as a transactional currency or store of value with no centralized governance, its network effect is so big that nobody can really take that away. And let's see, what else did we want to highlight? All right, so let's just go and break down what Bitcoin is, and we could also explain Ethereum as well. This is a good article. Read it earlier. I don't know who this guy is. Never watched any of his videos, but he's gonna break down Bitcoin and Ethereum. All right. So basically, the only similarities between Bitcoin and Ethereum are that each are digital currency, and they're both decentralized, and they use blockchain, which is distributed ledger technology. Bitcoin was launched in 2009 in response to the financial crisis by an unknown character named Satoshi Nakamoto. Hey, sorry about that. And then it has no central authority and no central bank. And Bitcoin is not physical, it's all digital, like how everything's turning digital, and it is stored on a public ledger. But over time, since Bitcoin was created in 2009, people realized that this technology could be used for things other than transactions or a store of value. So this is where Ethereum came about. They wanted an open-ended, decentralized software platform that can be used for business applications and an unlimited number of things. So this when Ethereum came about. And Ethereum is its own platform that runs on its own programming language on the blockchain and is powered by ETH, the token. And this is where most of the differences come about. Ethereum transactions are a lot faster than Bitcoin. They take seconds up to minutes, and they have different goals. So one of the problems with Ethereum right now is that it's used for so many things. With DeFi that we talked about, decentralized finance, trying to revolutionize the current financial system with banks and lending that we have, and doing that through crypto. NFTs are based on Ethereum. So whenever you use these DeFi platforms, such as Maker, Compound, Aave, whatnot, the fee is paid in Ethereum. And if you want to buy an NFT, you have to pay it with Ethereum, and then there's a fee charged with that. So Ethereum is a currency used to access those platforms. But the problem with Ethereum right now is the scalability. So it can't handle too many transactions. It is faster than Bitcoin, but with everything trying to be built on it and all these different use cases, that's the problem with Ethereum, the scalability. It can't handle that many transactions right now. And that's what the purpose of ETH 2.0 is trying to do, is trying to minimize the fees associated with Ethereum-based transactions with a protocol called EIP 1559. And ETH 2.0 is also trying to transition to a proof of stake network where more Ethereum will be taken off exchanges and staked, which is like removing a portion of the Ethereum supply to maintain the network of a proof of stake network compared to a proof of work network, which Bitcoin and Ethereum are based on right now. And then also improve the scalability with ETH 2.0. And this should be coming sometime later on this year in 2021 or 2022 or later. It's going to take a long time for these things to get released because I want to ensure that everything runs smoothly and that this can be a network that will run for years and years and forever. And Bitcoin here was created to be an alternative currency. So an alternative currency, a medium of exchange, peer-to-peer exchange, while Ethereum can also be used as a currency to exchange value, but the primary application is on the blockchain technology to build further applications on a decentralized ledger, and anyone can build on it since it's open source code. And these are the two key differences between Bitcoin and Ethereum. And if you look at the comparison for returns, let's look at this over here. All right, so it just talks about ARK investments, MicroStrategy, and Square that have allocated a certain percentage of their cash balance to crypto. And here's a projection based on Metcalfe's law, where Bitcoin will grow to within the next few years. And this is a more conservative estimate. So let's estimate to 100K to 200K. And if Metcalfe's law, what is Metcalfe's law? So it states that the value of a network is proportional to the number of users. So the value of a network increases as the number of users on the platform increases. And we'll look at the number of users on each of Bitcoin and Ethereum later on. And here, this article highlights why Ethereum might possibly outperform Bitcoin. So Ethereum premiered in 2015, Bitcoin started in 2009. But look at just the last year. Ethereum from the bottom, let's say the March 2020 bottom, when the black swan event of the pandemic truly first hit, from Ethereum around $80. Ethereum rose 593% last year in 2020. Bitcoin ran up 460%. Both amazing, incredible returns in 2020, but you can see Ethereum outperformed Bitcoin then. And again, based on the Metcalfe's law that we talked about, the number of users on the platform, with Ethereum gaining prominence with the hype of NFTs and DeFi, as we frequently talk about, the user growth is faster in Ethereum. There's also there's more developers using Ethereum or on Ethereum as well, because Bitcoin is more of a finished product. The only thing they really want to integrate is Lightning Network to speed up the transactions on Bitcoin, since transaction takes a few minutes on the Bitcoin network currently. But Ethereum's still an unfinished product. We don't have ETH 2.0 yet. We have problems with the fees, the high gas fees with Ethereum. So there's a lot more developers working on it, and the applications for Ethereum are span more vast space than what Bitcoin currently is used for. So active addresses for Ethereum grew sixfold in the past 4 years, where the Bitcoin usage grew only 50%. So you can see Bitcoin active addresses, Ethereum, and Litecoin. There's Litecoin there. That's why I don't really mess with Litecoin or think of it as a long-term investment, but that's just me personally. And this article is written on March 19, 2021. All right. And what else does he talk about? The supply. So Bitcoin, there's going to be in total 21 million Bitcoin total ever. There's about 47 million millionaires, as Bill Miller talked about in the previous video. So not even each millionaire in the world can afford one Bitcoin if the people continue giving and increasing the value of Bitcoin due to the demand. And there's 21 million Bitcoin, but there's 100 million Ethereum right now. But with the proposed update of EIP 1559 Ethereum. So really anything you can Google it, right? So EIP 1559, what is it? It will overhaul the fee market with Ethereum. So it's proposed to go live in July. So one of the problems with ETH right now is the high gas fees. You can pay between 60 to 100 to $1,000 for one just transaction. And EIP 1559 is supposed to flip issues with the experience. And traditionally, the fee process now, a user sends a gas fee paid in ETH to a miner for a transaction, and then that gas fee will be sent to a network with a as a burn for the transaction, and only part of it is paid to the miners. But then actually, that's what they're proposing, is to burn these fees, and then this will limit the cost of fees or transactions for Ethereum, thus increasing its price. And here, let's go back into the supply of Ether versus Bitcoin. So 100 million Ethereum versus 21 million Bitcoin. At the time, Ether was 1800, Bitcoin 54K. And you can see back in March, a month ago, we're a little lower than this now. But the active addresses, total active addresses, like we talked about from Metcalfe's law, the more users, the more valuable the network is. There's 750,000 addresses for ETH compared to 900,000 Bitcoin addresses. So it's creeping up, getting closer to it. And then, so with the number of addresses, that would justify a market cap of nearly half a trillion, or about 3 times the current price of Ether. So the market cap of Ether right now is only 265 billion currently, and you can see it's about a little less than a third of the market cap of Bitcoin. But with Ethereum and its use case for business adoption, this article is predicting Ether to go to 7 or 8,000, and its price right now 2,300. You can see a lot of potential gain left for Ethereum still. All right, so what is a better investment, Bitcoin or Ethereum? Bitcoin has the first mover's advantage, the popularity and limited supply. The can be used as a store of value. And then most investors, the big institutions, Elon Musk, Tim Draper, Ray Dalio, they speak about Bitcoin. Bill Miller, like we talked about earlier. They're not generally sold on the whole crypto asset space, but they do speak highly of Bitcoin, and some of them have been invested in Bitcoin already. And because of its network effect, how long it's been around, how it's growing further adoption and gaining more legitimacy, they always go to Bitcoin first and foremost. And that's why we see Bitcoin do so well. The present investment case, due to the unlimited printing of the US dollar and devaluing of the US dollar, and they want to look at Bitcoin as a hedge against the inflation, the increasing inflation. And we've seen companies like MicroStrategy, Square, PayPal putting cash reserves into Bitcoin. So Bitcoin currently has a clear advantage over Ethereum due to these factors that we talked about. But if you look further into the future, I could see the argument on why Ethereum may outperform Bitcoin in the future. So this is this article's author's thought process on why Ether might outperform Bitcoin. So his investment thesis is that cryptocurrency and digital money idea is going to use blockchain tech, and this is where Ethereum will have the advantage. So Ethereum has more developers than any other token, and it's going to gain a massive lead that he thinks in the business's adoption of blockchain technology. And of the 50 companies tracked by Forbes adopting blockchain, 32 have chosen Ethereum. So let's click this article. Blockchain 50 Forbes here. I don't know when this article was written, but let's see. So let's just look at the companies using Ethereum blockchain technology. First and foremost, Amazon. Amazon has Amazon Web Services, but they have chosen to work with Ethereum. Let's look who else is here. Baidu, big company in China. BMW uses Ethereum or works with Ethereum. Citigroup, major bank. Coinbase, of course. Credit Suisse in Switzerland. Daimler, which is going to use the blockchain technology to track the supply chain of Mercedes-Benz. The jewelry, De Beers for Jared Zales jewelry. Dole Foods, like we talked about, for supply chain and transacting, legitimacy of transactions and just tracking of products through the Ethereum network. So there's Dole, Facebook, of course, blockchain. They want to launch their own Libra coin. GE, Google, Honeywell, Security, HSBC Bank of England, IBM, all right, JP Morgan, LVHM for Louis, luxury brands, Mastercard, Microsoft, Nasdaq, Nestle, Overstock, Ripple, Samsung, Square, Tencent in China, T-Mobile, UBS, the UN is using ETH, Vanguard, Walmart. So like these are the biggest companies in the world, right? And these are all using Ethereum somehow or working with them for their businesses. So this is why people think Ethereum could overtake Bitcoin in the future as being the largest market cap based on its utility, its use case, and the partnerships and its application for businesses worldwide. So Amazon Web Services has even adopted ETH, help businesses adapt its technology. JP Morgan launched their JPM coin for people working in the company to facilitate $6 trillion that it moves. And the Ethereum Enterprise Alliance, I wanted to highlight this too. It's So they have 150 organizations such as Cisco, Microsoft, Mastercard. And then, so Ethereum has a lead in applications development and businesses working on it. So when you hear other companies talking about being an Ethereum killer or whatnot, like what are they going to kill? They're going to kill all these partnerships and businesses that are already working and building on Ethereum. So I think that argument is irrelevant for now. Of course, everything to be seen in the future. And now, and he states that even though Ethereum may not be as well known or popular right now, it might be a better opportunity than Bitcoin. And now, that being said, his thought process is the same with mine, to own both Bitcoin and Ethereum and to regularly add to both consistently. So I've been doing this since about 2019. I've been weighing more so to Bitcoin. I didn't truly understand Ethereum quite then yet, but since Bitcoin has the first mover's advantage, we know fully what it's going to be already. It's basically almost a finalized product, and with the limited supply, I've more so weighted my portfolio to Bitcoin, secondly Ethereum, but you can see the argument for why someone might be more heavily weighted to Ethereum over Bitcoin. And just look at this other article further explaining Bitcoin versus Ethereum. We basically talked about all these things, but so at the time of this article, this was February 1st. The total value of Bitcoin was around 625 billion. Right now, we're sitting at 926 billion. You can see the debate between the two. And another thing about Bitcoin, right? The limited supply. We talked about 21 million total for Bitcoin. It's estimated about 3 to 4 million have been lost already. So actually, the real supply is about only 17 million, and then not even all have been mined yet. So I think there's about 2 to 3 million left to be mined, and that won't be done until 2140. So there's really, really a very limited supply of Bitcoin available on the market. And think of it as a savings account or as a long-term investment, and then you'll be fine. Not pay attention to the dips and think of it as or of course pay attention to those, but don't worry as much about the dips and think of it as a long-term hedge against inflation and the unlimited printing. So Bitcoin has the biggest attention from large investors, has stability, simplicity, and acceptance. And here's a great explanation of Bitcoin. Bitcoin is a scarce digital currency and store of value. And even though it's volatile, of course, there's going to be volatility both ways, up and down. It tends to be one of the most stable, has the longest history, and has been the most consistent and best performing asset over 10 years. Whereas Ethereum's only been around since 2015. And Bitcoin is global, another thing. If you have seen what goes on in other countries with hyperinflation, this is where Bitcoin's value also shines. So let's see, Turkish Lira, Bitcoin. So Turkey tried to ban Bitcoin, and because people were losing confidence in their own Turkish currency, which is a lira. The Turkish lira has plummeted, and then people want to keep their savings in dollars, euros, or Bitcoin. So look at the value of Bitcoin compared to the Turkish lira. Look at Nigeria, Bitcoin. And here, look at this. Why Nigeria is a global leader in Bitcoin trade. So more cryptocurrency trading goes on in Nigeria than almost anywhere in the world because people are losing faith in their government and the currency of Nigeria. All right. And then, so right here. So the top 10 countries for trading volume for crypto. Look at this, pretty crazy. Nigeria ranks third behind the US and Russia in 2020. And the value of the Naira, the currency of Nigeria, has dropped by 24%. And they further fear another 10% this year. This article was back in February 28th. And 32% of Nigerians took part in cryptocurrency, the highest proportion of anyone in the world. So this is the use case of Bitcoin and why it's so valuable, right? We think the inflationary problems in the US dollar are crazy. Think about these other countries. Venezuela, Bitcoin. Literally just Google any of these things, right? Look at this. This is probably a fake article, but let's look at this one. Coindesk. So Bitcoin adoption is increasing in Venezuela as well due to the hyperinflation being there. So they face hyperinflation. People that work hard, the hardworking Venezuelans, they cite a combination of factors for the rise in crypto due to migration, capital controls, the government is scaring them by seizing their money, and the hyperinflation of the petrodollar, which is the unit of exchange for Venezuela. And look at the option of exchange here in Venezuela. These are heat maps for what actually transacts a lot of Bitcoin. All right, so those are the different use cases for Bitcoin, right? So we have a decent brief overview on Bitcoin versus Ethereum. So Ethereum has a different goal, like we talked about earlier. It's a decentralized network where applications are built on it. Has more development. So the number of GitHub, Ethereum, so this is like changes to the code or updates, is 247 changes to Bitcoin's 4. And then we talked about Ethereum changing to a new process called proof of stake. With proof of stake, users are required to put up collateral or stake their Ethereum to become a validator on the network to validate transactions on the node. And with staking, you get paid a reward back in Ethereum. So less Ether will possibly be out in the world or in the supply, and then that is due to being rewarded in Ethereum for those who see it as a long-term investment to get paid back in Ethereum. And the proof of stake will lessen the cost of mining and for electricity and hardware costs. So less mining capabilities or less ETH will be sold by miners. Then the ETH will be staked because of the less supply and drive up the value even further. So less supply out, increased demand, of course, increases the price. Should you buy Bitcoin or Ethereum? The ultimate debate comes to investors' risk profile. So Ethereum with a smaller market cap, a third of Bitcoin, not being fully out as a complete product yet. Ethereum is considered a higher beta asset. So higher beta means it's smaller, it's more volatile, but it also has more potential for reward. So it depends on your risk profile. That's why we always say to have both great assets to invest in for the long term, and they're both poised to grow well over time. Bitcoin is a more stable one with bullish sentiment, but Ethereum is gaining bullish sentiment due to the factors that we talked about. Yeah. All right. So here's another clip for Bill Miller talking about Bitcoin.
Look at some on-chain fundamentals, but first, Bill Miller, highly regarded, legacy, traditional investor. What does he think about Bitcoin? TLDR, he is bullish. Listen to this.
There are many, many different ways to look at Bitcoin. The simplest one is just supply and demand. You mentioned the mainstreaming of it and the institutional acceptance of it. And I think, supply is growing 2% a year and demand is growing faster. That's all you really need to know, and that means it's going higher. I think it's like digital gold. That's the first step in it. And gold is about a $10 trillion asset category, and Bitcoin's $1 trillion, and it's infinitely divisible, or almost so. It's easily transportable and can be sent anywhere in the world if you have a smartphone. So it is a much better version as a store of value than gold. And then there's $15 trillion of negative yielding bonds out there. Why would you have that when you could own something that at least has the potential to go up?
Anyone thinking that we are going into a prolonged price correction, a bear market, needs to know about the rate of new users coming into the network each and every day. We are in the middle of a bull market with a hockey stick of new adoption, especially in the last 2 weeks.
All right, there's Bill Miller again. And I wanted to highlight Bitcoin Zay. I'm the author of Bitcoin in Black America. That's part of why I'm doing these videos. I just want to show that crypto, I think, can be the neutralizing factor for all ethnicities, all minorities, all genders, and all nations around the world to fight the central bank manipulation and to gain value and assets that will grow and that will be separated from the current financial system that we're currently in. So here's Bitcoin Zay, Isaiah Jackson's thoughts on Bitcoin.
You have a theory, a thesis that Bitcoin and cryptocurrency can be used to close the wealth gaps in underrepresented communities. Explain to us how this can happen.
Certainly. So for the first time in history, we have a Plan B option to the current financial system, which has seen years of redlining, racial discrimination, and other egregious acts by retail banks to the Black community. And
so redlining, if anyone knows about this is my just brief understanding of it. Like back in the 40s or 50s, when African Americans tried to apply for certain loans to buy properties, there were certain areas that they blocked off the Black community from buying in. It's called, and this is where the term redlining comes from, or they couldn't buy in it, or they weren't approved for the loan, something like that. But yeah, research that a little further.
In my opinion, the Black community has the opportunity to shift our mindset and our money, because money is nothing but monetary energy. We can shift our energy into Bitcoin and cryptocurrency because there is no barrier to entry. It is unconfiscatable, which is something we have not seen in the history of the United States for the Black community. So I think Bitcoin is a great step in the right direction, and I think it can definitely help long term.
I want to talk to you more about the issue of digital redlining, but before we get to that, I have to ask about the volatility. I start off this segment talking about the big drop in Bitcoin earlier this week. You have people like Mark Cuban saying there's a bubble. You have Jeffrey Gundlach, raising red flags about the valuations right now. How concerned are you that this might not be the right time for people to be moving their money into Bitcoin, or just the fact that it's incredibly volatile?
Well, if you're worried about the price, you don't really understand what Bitcoin is for, because on a low time preference, actually, Bitcoin has only not been profitable if you bought it 5 days out of a 12-year history. It's 99.9% of the days that you have entered Bitcoin, you would be in profit. And the drop that we've seen recently is nothing more than market cycles. You see dips along the way. There were over 20 to 30% dips on the way up to 19,000 back in 2017. And what we're seeing now is par for the course. We saw the price increase dramatically. It does change over time, but if you have a low time preference, if you're in Bitcoin as a savings account, as a way to preserve your wealth, then this volatility should not scare you at all. And for anybody who it does scare, you need to reevaluate why you're into Bitcoin. It's more than an investment, more than something that you can trade. So this volatility doesn't scare me at all. Should not scare anybody. Continue to dollar cost average over time and forget the price, and you'll be fine, because this is a scarce asset. There is no reason for you to be scared out of purchasing it. There's only a certain amount available, and the fact that Black people have the opportunity to do that now, we should take hold and do it, simply because there is no other options outside of this financial system to preserve our wealth other than Bitcoin.
All right, so there's Bitcoin Zay, and he talked about the limited supply and the scarcity, so I want to highlight this as well. This chart shows the increasing illiquid supply. So the green is the amount of Bitcoin that's being bought and moved off exchanges. So moved into different wallets or stored, so people aren't selling this Bitcoin, which is all this green. And then this red is decreasing supply. So you can see This is where people were selling more Bitcoin, selling. But look in here, 2021. Who is really selling right now? Nobody. Everybody's just storing it and keeping it because they realize the limited supply. And this is why, and with limited supply and demand increasing, of course, price is gonna increase.
By liquid supply and illiquid supply. Illiquid supply are those Bitcoin that can be easily accessible. These are the coins that provides liquidity in cryptocurrency exchanges. If you go to Coinbase, for example, and buy Bitcoin, then you are buying Bitcoin from liquid supply. Illiquid supply is the totally opposite. These are the Bitcoin that are predominantly being stored on the cold storage hardware wallets. If you're a long-term Bitcoin holder, you would buy Bitcoin from liquid supply, aka Coinbase, then transfer those BTC to your hardware wallet, and this is how the Bitcoin becomes illiquid. Most of the illiquid supply is held by large whales, big corporations, and large financial institutions. This chart clearly shows massive increase in illiquid supply. In other words, when more and more Bitcoin becomes illiquid, there is less and less available to the market. Then Bitcoin becomes more and more scarce, and demand goes up. Here is another sign of consistent Bitcoin demand growth. The purple line represents the number of addresses holding in between 0.1 to 1 BTC. It was consistently growing since 2019. What is very interesting is that the green line that represents Bitcoin supply held by addresses in between 100 to 1000 BTC starts to pick up its momentum just recently. In just March alone, these whales addresses increased by 15%, while shrimps addresses increased by 20% over a longer time frame. What it tells us that it does not really matter if you're a whale or a shrimp, but the demand after Bitcoin continues to go up. Now, let's take a look at this.
All right, so as you can see here, the bull market really started when Bitcoin broke around 12K, which is here in October somewhat. And you could see the large accounts between holding 100 to 1000 Bitcoin. They significantly started increasing here, but then it really went parabolic here in 2021. The institutions, high net worth individuals started hoarding all this Bitcoin. Tesla, MicroStrategy, PayPal, and yeah, and even retail. So retail that's holding zero point 0.1 to 1 Bitcoin, they've been increasing as well. So more demand, less supply, increasing price. All right, and the chart where he got this from, I want to highlight this website. It's called Look Into Bitcoin. Lookintobitcoin.com. And what Isaiah Jackson, Bitcoin Isaiah, was talking about, Bitcoin profitable days, right? So this is what blows my mind too. How people still, even if you didn't believe in Bitcoin as being something legitimate, why would you not want to be in something that's been profitable for basically its whole existence? So look at this. Bitcoin has been around since 2009, right? 3,900 days. Out of those 3,900 days, basically, only 50 days it's been unprofitable. So literally, if you bought anywhere here, wherever this green is, you've been profitable, right? But those 50 days, basically, you just hover over this chart. So if you bought Bitcoin anywhere above 50K, you'd basically be unprofitable. But so 98.7% of days, Bitcoin has been profitable. And this website is cool too. So the other chart that Aimstone talked about here is also on Look Into Bitcoin. So you just go here, home, and then you could look at these different charts. So we'll go over these. These are charts that you can use to target when you would sell your Bitcoin as well. Hey. All right. And what else did I want to highlight? So we talked, and here, look at Bitcoin's market cap and compare it to Visa and Mastercard, what it's trying to compete with as a payments network. Bitcoin's market cap, this is on April 12th, was 1.1 trillion. Hey. Hey. Bitcoin's market cap 1.1 trillion, right? It's worth more than Visa and Mastercard combined, and it's even worth more than J.P. Morgan, Bank of America, and Wells Fargo combined. All right, so Bitcoin with a 1 trillion market cap. Remember on CoinGecko, Bitcoin's market cap around 926 billion now. It's down a little bit, but this magical internet money has surpassed the market cap of names such as Netflix, Walmart, Samsung, Facebook, Alibaba, Tesla, right? And then now they're anticipating it could take down Google. And right here, look at Visa's market cap, 490 billion. Mastercard's market cap only 374 billion. Hey, see Bitcoin's bigger than all these. And what we talked about with ETH 2.0 or the next step for Ethereum. So they want to improve their scalability with sharding right here. So this is just on the ethereum.org website. And these are the upgrades that they're projecting for it to launch. So you can just look at what is going to be improved on ETH and what they're working on. All right. And here's another thing I wanted to highlight for Ethereum versus Bitcoin. Look at the transactional volume for Ethereum here. This is CryptoLark.
This shows basically that Ethereum has gone mega bullish in Q1 of this year. Let's put it like this so you can see it a bit better. So in Q1 of 2021, Ethereum settled more than $1.5 trillion. That's crazy. That's a lot of transaction volume. That's more than the previous 7 quarters combined. This is incredible. Ethereum is without a doubt becoming the premier settlement layer of the blockchain space. This beats Bitcoin by a lot, by the way. People are mostly buying and holding their Bitcoin. They're not transferring around. They're buying it. They stick it in their cold wallets. And that's about the end of it. Whereas Ethereum is being used for like everything. If you want to interact with any DeFi on Ethereum, well, you need to use Ethereum to do that. We have NFTs going on. We have stablecoin transfers. We have basically Ethereum being the unit of account, which is something that Bitcoin didn't really manage to do. But Ethereum now being the unit of account for DeFi, the unit of account for NFTs, and much more. So really cool to see this. It's just incredible transaction volume coming through for Ethereum. And finally for today, we have this.
All right, so there's more bullish narrative for Ethereum, the transactional volume, and we talked about the Ethereum Enterprise Alliance, right? So the EEA, Ethereum Enterprise Alliance, enables organizations to adopt and use Ethereum in their daily business operations, right? So we talked about Ethereum being used for business applications and for business opportunities to drive industry adoption and collaboration. There's more than 200 organizations supporting the Ethereum Enterprise Alliance. All right, let's look at these organizations. Organization members. Look at this A to Z, man. This shit is crazy. All right, so we got AMD. We got, let's see, who else is in here? We got Chainlink. Let me get my charger. And last thing I wanted to highlight is these on-chain metrics of Bitcoin versus Ethereum. So look at this. These are the transaction fees. Red is Ethereum. Blue is Bitcoin. Look at the transaction fees. 33 million compared to like 12 million. So about 3 times the transactions. Number of active addresses. There's more Bitcoin addresses than Ethereum, but you can see Ethereum is increasing. Percentage of supply and profits. About 98% of people holding ETH have been profitable. On Bitcoin, 92% now. Miner revenue, you can see both are increasing. Percentage of active supply. So literally only 67% of Ethereum supply has been active in the past year compared to 44%. So less Bitcoins being moved. But yeah, that's probably the last comparison I want to highlight between Bitcoin and Ethereum. Or here, let's see. Bitcoin developers. So right here. Last thing I want to highlight right here. So one network, Bitcoin versus Ethereum, has a clear winner. More than 300 new developers per month are joining ETH. So Ethereum has continuously grown. So right here, out of the ecosystem, Electric's report shows Ethereum so far out in front that second place is misleading. So almost 2,300 average monthly developers working on Ethereum across the third quarter of 2020, with Bitcoin just under 400. So you can see above, like, what is that? Almost 6 times the developers on Ethereum versus Bitcoin. But like we said before, Ethereum's still not fully developed yet, so that's possibly why. And of course, with the business adoption with Ethereum, also possibly why there's more developers on Ethereum. All right, hope you found some useful info on this, and enjoy your weekend, your Friday. Thanks for watching. Continue to DCA, dollar cost average, into Bitcoin and Ethereum, and don't stress out too much about the markets. All right, it's for financial purposes only. Like, comment, subscribe, and share, please. And thank you again for watching. Have a good one. Peace.